Hello, everybody. We are just going live. We're just going to wait for our trading coach, Walter, to join. He should be with us any second now. So don't worry. I see. I hope we are live. I believe we are live. Yes, we are. Like I mentioned, if anyone is watching, just bear with us 2 minutes as we wait for our trading coach in today's session, Walter. It's going to be some very exciting stuff. We should be trading the US Open and a range of instruments from gold, euro US dollar, pound US dollar. So a lot of good ones. We're just going to wait for him to join. It should be any second now. And we will start getting this show on the road. We're also going to wait for some viewers to come in. So if you are joining right now, just hang tight for a few minutes. And Walter is here. Hello, Walter.
Hey, how you doing? Okay, sorry about the delay in this.
No, not at all. It's absolutely fine. We are live now. We're getting people coming in. So we're just going to give it a few minutes, to allow people to join, obviously.
Amazing.
On time.
Yeah.
But in the meantime, feel free to start setting up your charts however you like. Take that time to get everything prepared for the trading session. I'll address the viewers in the meantime. So for the viewers who would like a bit of background information, Walter is a professional trader. He's a trading coach here. So you're going to see some really interesting stuff. Now, he is a day trader, and meaning that his position lengths are usually going to be, ranging into the hours. So I would say, obviously, don't expect to see an open and closed trade, obviously, because, it does take, I don't think we're going to be on that long. But you're definitely going to see a lot of good analysis, break down his thought process. We're going to be looking at gold, euro, US dollar, pound, US dollar. So some really big instruments that a lot of people are interested in trading. So yeah, I'm sure there's going to be a lot of good information being shared in this session. So we'll just give it another few minutes to allow people to come in. And also, if anyone watching has any comments for Walter or myself, it could be trading related comments, feel free to post them. We will definitely start addressing them live. So yeah, feel free to make yourself known, leave some comments. Always appreciated. And yeah, well, I would say probably in the next few minutes, 3-4 minutes, we could probably load up a chart at some point and we can get this show on the road. I hope everyone's doing well. There we go. So yes, to all the viewers, just bear with us another few minutes. This is just part of live streaming. It is live, so you've got to just wait sometimes for people to fill up, but it's fine. I'm also just going to check everything is set up correctly and ready, so we have no hiccups along the way, and it's all looking good. Awesome. Okay. So Walter, how are you doing today?
I'm fantastic. I'm ready to roll. It's been a really good trading day so far, actually, because I typically trade Asia and London, and now all my positions, I'm on a long position in gold and a short position on Bitcoin dollar, and those are running really, really well. So yeah, it's a really good day so far. So I can't wait to see what I can find for you guys in New York Open.
Absolutely, I'm sure a lot of people are going to be excited. And this is the thing, right?
100%.
Trading is, you can, no matter where you are on your trading journey, you can always learn from other traders. Never think you're above learning.
Yeah.
Never think you know it all, because believe me, years and years down the line, there's still things I pick up now and be like, oh wow, that's actually a great idea, or So always be open-minded, always be ready to learn. And I'm sure I'm going to really enjoy this session. But yeah, whenever you're ready, let us know. We can do the screen share, get some charts up, and
no worries. I'm just curious, how many do we currently have on the call streaming in?
It's kind of hard to see the numbers because I am using one of these platforms which does it all over, and to be honest, I'm not too familiar with it. This is the only second time I'm doing
across different platforms. I see.
But the team in the back, they'll know the exact numbers and things like that. So, okay, I see that you have shared your screen. I'm going to go ahead, pop your screen onto the stage. Oh, that looks lovely. There we go.
Awesome.
Awesome.
So I'm going to assume that I can see the comments. Can you hear me properly, by the way? How is my microphone?
Yes.
All good?
Crystal clear. Crystal clear.
Awesome. So yeah, firstly, I just wanted to say, if you do have any comments, and for whatever reason I don't see it, Sam, just let me know, or someone on the team is going to sort of point it out to me and make me aware of it, okay?
Absolutely. But if you're ready to, I mean, I might jump in here and there if I have, because I might even have questions as well, because like I said, it's always interesting. But yeah, this is your show, Walter. These are your charts. This is your time to shine. So I'll go ahead. I'll mute my mic so I'm not distracting you.
Absolutely. No,
Yeah.
I'm good. Super pumped, super excited for this. So yes, just so for those of you that maybe you're obviously seeing this for the first time. So my name is Walter. I'm from the UK, like Sam, from a county called Kent. And I've been trading for sort of like 8 years of my life. So been trading for quite a while. And I've been full-time trading for 4 years out of those 8 years. So obviously the first 4 years for me was what many of you might be going through right now, which is the learning curve and, learning all kinds of stuff. And then after that, it sort of, I started to figure things out. And then my biggest change became like the first year that I learned to be consistent in my profitability. And then after that, it was sort of like a upward journey. But of course, I still get, losing streaks from time to time. It's normal. If you're planning to be a trader in the long term, I just want to tell you, there is no point where it's always going to be profit and it's always going to be great. No, like even after you learn to be consistently profitable, you are going to have periods where your psychology may not be on point. You are going to have periods where your system may not be as effective as it was. And that's okay. That's normal. Every single trader experiences that no matter where you are in the curve. So what I'm going to go through with you guys this session. Now, I know for some of you guys, I'm not sure exactly where you might be plugging in. So I don't know, just put in the comments the country you're plugging in from or the city you're plugging in from. I'm very curious to see where you guys are plugging in from. Personally, I'm plugging in from Indonesia. So I'm in Asia. I don't know if anyone's plugging in from the States. If you are, well, good morning to you. So I'm going to be doing 3 analysis for you guys today. I'll be looking at gold to the dollar, pound dollar, and euro dollar. Now, my personal specialty is gold to the dollar, right? So that's my baby. And I'm sure a lot of you guys also love gold. It makes a lot of really good moves pretty much almost every single day. And also right now we're looking at a very, very bullish market for gold. It's been really bullish since the start of the year. So some really exciting moves that we are going to be seeing on gold in the coming days and weeks ahead. And then euro dollar, pound dollar, these two currency pairs, I used to trade them quite a lot over the years. So I'm very familiar with them, very used to how they move. So again, I'm going to do a bit of breakdown on euro dollar, pound dollar for you guys as well, just in case some of you guys might be trading gold, some might be trading euro dollar, some might be trading pound dollar. So my goal is to give you guys an idea of what you can anticipate over the coming hours and even potentially over the next session or two. So we're going to start off with gold. Now, because this is the first time that you're seeing me break down the market, right? I want to give you guys a complete breakdown from scratch. So as you can see, my chart is completely naked. There's absolutely nothing on it. So I'm going to show you guys exactly how I break down the market and how I analyze from A to Z. Now, of course, there is going to be some questions. And of course, you guys might hear me use some terminologies that you're not familiar with, and that's okay. Just put it in the comments. And again, we have 2 hours together. So when I'm not actually looking for an opportunity, then I might have time to actually break down some concepts for you guys. But before I actually start analyzing the market, the first thing I always look at, so this is what I look at Monday morning, is I try to get an idea of what the red news will be for the days, for the week ahead. Okay, so especially today's Monday, you do need to know what red news will be taking place. It's incredibly important. Do not just start a trading week without an idea of what's happening. So this week is pretty quiet. It's one of my favorite weeks, actually, the weeks where you have maybe 1 or 2 red news, so you don't always need to be looking over your shoulders when you're in a trade. So yes, I mean, we have a speech from President Trump at 7 p.m., which again, not a major deal. But what the first key major red news this week is on Thursday morning, so New York afternoon, sorry, at 1:30 p.m. And that is a GDP, all right? So GDP, again, major red news data release from the States, and has a very high likelihood of affecting any dollar-related, any dollar pairs. So it could be pound dollar, euro dollar, and even potentially gold as well. And then on Friday, we have core personal consumption expenditures. So again, this, in my personal experience, this doesn't always move the market a great deal because the market isn't always focused on this data. But it is just important just to be aware of it, have it at the back of your mind that 1:30 p.m. there is a red news that data that will be released. It may or may not move the market, but the biggest one this week is what will be taking place on Thursday at 1:30 p.m. So we're safe today, right? No major red news today. Now, the next thing after the red news side of things is I'd like to sort of like take a look and see. So with gold, for example, I want to break things down from the higher time frame down to the lower time frame, right? Now, I know different traders break down the markets differently. I personally do not like to waste too much time on the higher time frame. The reason being is because I'm a day trader. I'm focused on sort of like short-term moves. I'm not interested in holding trades for more than a few hours, okay? So the first thing I'm looking for on the daily is I'm just interested in daily highs and daily lows. Like, where is the next target the price is potentially heading towards in terms of a short-term high, short-term low, medium-term high, medium-term low, or even a long-term high, long-term low. Now with gold, it's pretty straightforward because the next high was the recent high that was created only a few days ago, okay? So obviously this is the highest point. This is pretty much the highest price that gold got to at, I think it was like 2.9, right? $2,954, right? So this is my next daily target, okay? So all I do is I basically just identify this with a line, right? And then I'll just label this daily short-term high, or in short, DSTH. That's it. And then secondly, of course, I look for the next low. So the most recent low that was created is this swing low down here. So when I look for highs and lows, I tend to just focus on swing points. So swing points are created when you have free candles, the intermediate candles between the free candles, the middle candle tends to have the highest high. And of course, if you're looking at the swing low, the intermediate candle between free candles tends to be the lowest point of it. So obviously the lowest, the most recent swing low is down here. So this is low created at 2.9K for gold, right? So this is the next daily short-term low. Okay, so again, very simple. That's it. So all these feeds me is, it gives me an idea of if I'm in a trade and I'm looking for secondary targets, right? So let's say TP1 is a 122, TP3 is a 124. Like, I tend to focus on swing points as my profit objective. So if I'm looking to go long on gold, for example, of course, the most obvious long swing take profit region is going to be the daily short-term high. Simple as that. Now, if we go down to the 4-hour time frame, again, what I'm looking for here is pretty straightforward. So again, I'm not spending too much time on my higher time frames because a lot of my activity tends to take place on the lower time frame, and I do want to get there as soon as possible. So again, all I'm looking for here is where is the most recent high that was created within like the last 3 trading sessions. So obviously, if we look at the last few trading sessions, we can see that the most recent high that was created is right here. And price has pretty much taken out this high in today's session. It took out this high earlier today in Asia, right? So this is going to be my 4-hour short-term high. And then I'm looking for the most recent low that was created within the last few sessions. And we can see that that low is this low down here. So this is my intermediate low. So this is my 4-hour short-term low. Again, very simple. With trading, you do not need to make it overly complicated. And this is something that I've learned over the years, is that there is absolutely no need to overcomplicating trading. The simpler, the better. And then we'll go down to the 1 hour. Again, all I'm looking for on the 1 hour are profit objectives, right? So again, one type of profit objective that I look for is short-term highs and short-term lows, right? Another type of profit objective I look for is order blocks. But I'm going to go into order blocks a little bit later on. And the third type of profit objective I look for is specifically focused on the 800 EMA. So again, I'm not going to touch on the EMA right now. That's something I'm going to bring into when I go onto the lower time frame. So again, what I'm looking for on the 1 hour is confluence of two things: confluence of short-term highs, short-term lows. And these short-term highs and short-term lows can sometimes form something known as equal highs and equal lows. So on the 1 hour time frame, what I like to look for are very obvious relative equal highs and very obvious relative equal lows. So if we look down here, for example, right, these two lows are relatively equal to each other. These are liquidity zones. So below these levels, you would usually have a pool of sell side liquidity below relative equal lows, right? And then above relative equal highs, you're going to have pool of buy side liquidity, right? So this low, for example, is relative equal lows. So these two lows are very crucial for me. So on the 1 hour, all I'm looking for is this, right? So what targets isn't obvious on the 4 hour, but it's a lot more obvious on the 1 hour. And on this time frame, it's going to be the equal lows. So again, these are levels that are just there. If I just so happen to see an opportunity to trade in that direction, these are areas that I simply will be interested to take profit. That's all. These are not going to feed my directional bias. They're not going to feed anything else. Okay. And then on the upside, there's really nothing else, because of course we have the 4 hour high, which price has already taken out in today's session. And then we have the daily high, which is the next obvious high. So between the 4 hour and the daily, on the 1 hour, there isn't any sort of other profit objective between these two highs. So that's done. I go down to the 30 minutes. And now this is where things begin to get interesting. So on the 30 minutes, what I'm looking for is trend, because I'm a predominant trend trader. I like to trade the market when it's moving in a specific direction. So if the market is very obviously bullish, I want to trade in line with that. If it's very obviously bearish, I want to trade in line with that. But when it comes to trend, right, there's a very specific way that I look for trends. Now, of course, if you're new to retail trading, or if you're new to trading generally, right, you're kind of taught to identify trends using trend lines like this, right? So this is like a very standardized way of identifying trends with trend lines. Now, a lot of you are probably familiar with this. Personally, I don't look for trends like this. The reason being is because a lot of the time when you use trend lines to identify trends, yes, you can identify key areas to sell, especially when price interacts with the highs of the trend line. And you can find key areas to buy when price interacts with the low of the trend line. But one of the difficulties with relying on trend lines as a way of establishing trends is that you just can never tell when a reversal is about to happen, right? So if you're always buying at highs, selling at highs, and buying at lows, at some point, price is going to break that high. And you're going to be on the wrong side of the market. Or at some point, price is going to come down and break the low. And you're going to find yourself on the wrong side of the market. So the way that I identify trend is something known as cycle, a market cycle. Okay. Now, I'm not going to go into too much detail about market cycle right now, because I want to get the analysis out of the way, because within now and the next hour, these are when I usually find really good entry opportunities. So I don't want to miss a good entry. So I'm just going to get the analysis out of the way first. And then afterwards, I can go into a little bit more detail about market cycles and how it works. So the first part of a market cycle for me is the point where market breaks structure, right? So some of you guys might already be familiar with the term break of market structure. So what I do is I usually would find that point and label it as number one, okay? So number one is the point where market would have broken some sort of structure. So if it was in a downtrend and then all of a sudden it breaks structure to the upside, that is usually an indication that the market is looking to change direction, okay? So that's the first part. So I'm just going to make this only visible on the 30 minutes time frame. The second point is after the market has broken structure, it will usually form a new high. That new high is the second point of my trend cycle. Okay, so the 3 points that I'm looking for. So the first point is the point where market breaks structure, and then it accumulates for a bit. So it just accumulates for a period of time, and then it breaks outside of that accumulation range, and then gives a new high, creating the second point wherein after price breaks structure. The final point of my trend is, again, after the market obviously breaks above the high, that creates the third point. Okay, so right now, we're in the third phase of my bullish cycle. So this is usually what I anticipate during the third phase. So the third phase is usually the final phase of the market cycle. So after the third phase, sometimes you get like an aggressive push to the upside. And then after that aggressive push, you then get some sort of a reversal. And that reversal would usually go to some sort of higher time frame liquidity level. So right now, we're in that final phase of my cycle on the 30 minutes. So I'm very interested to obviously either A, go long from an area of interest, or B, wait for price to get into an area of interest, such as a daily target zone, and then I'm going to be looking to sell from there. Okay. So where are my areas of interest? So when the market has broken outside of a previous area, that area becomes an order block. Okay. So I'm going to say that new ranges. Okay. So the moment the price breaks away from these ranges, right? For example, all of this is my 30-minute bullish order block. So this is an area that I'm interested to trade into the zone, right? I'm interested to buy from that area. But if price doesn't trade into that zone, right, then I'm not going to be looking to buy at all. Okay. So I'm going to just delete this from now, just giving you guys an idea of my AOI. I'm going to identify the AOIs afterwards, because after the 15 minutes trend cycle, I then look for the 15 minutes trend cycle. The reason being is because the market is fractal. Now, you've probably heard this before. So what does it mean? The market is fractal. What that means is whatever you see on the higher time frame tends to repeat itself on the lower time frame, and vice versa. Whatever you see on the lower time frame tends to repeat itself on the higher time frame. So the same theme keeps on going. So I use that fractality of the market to identify opportunities that may not be obvious on one time frame. Hence why I do the same analysis on the 30 minutes and the 15 minutes, and I look for alignments. But the misalignment is usually where the best opportunities are. So if that doesn't make sense now, that's okay. I will elaborate on that either this session or another session in the future. So what I'm looking for here is, again, I'm looking for the most recent trend cycle just to save a bit of time. This is a bullish cycle in and of itself. So I'll just show you guys. So this is number one. This is the point, the intermediate low. So in terms of what is a break of market structure, if you don't know what that is, more than happy to go through that with you guys shortly. So this is the second high that was created after this intermediate high, after the market gave a bullish shift away from that point. So this is labeled 2. And then finally, this is the third high that was created. And after this high, I then anticipate some sort of a reversal. As you can see, the market gave that reversal. And then after this reversal, I anticipate a trend reset. So a trend reset is when we get the beginning of a new trend cycle. So again, all I'm looking for in a trend reset is, again, number one, I'm looking for the first high that was created away from the lowest point. And usually that first high is where price would break market structure, right? Number two is going to be the new high that was formed after the first high. So this is a new high, market accumulated, pulled back. So this morning, I actually went long on gold, right? So my long opportunity took place from below this low. So the market came down, took out this low, which is my long opportunity, because I was anticipating a bullish continuation to form the third leg of the cycle. So as you can see, the market has broken outside of our accumulation range and traded to form the third leg. So this is the third high of our bullish cycle on the 15 minutes time frame. So right now, what we can see is the market is in that third phase of the bullish cycle, right? So therefore, what can we anticipate? We can anticipate from here one final push to the upside, and thereafter a potential reversal to the downside. So this is the final stages of a short term. So again, when I say short term, like for example, this was a bullish cycle, but this is a short-term bullish cycle that I traded in. This is another short-term bullish cycle. And after this bullish cycle, I would anticipate some sort of a reversal, potentially to these equal lows. And then who knows, maybe from there we could see a new bullish cycle that could potentially even deliver even higher highs on gold. Okay, but for now, I'm focused on where price currently is. So price currently is sitting within that third accumulatory phase of our market cycle. So AOIs. So now that I've done the analysis in terms of the trend analysis, the next stage of my analysis is looking for areas of interest. So area of interest is, again, where I'm going to be looking to buy or sell from. Okay, so the most recent area of interest is going to be the most recent range that price broke out of. So this is the most recent range that price has given a bullish break out of this range, making this my most recent area of interest. So again, I'm just going to make this a little bit more easy to look at, easy on the eyes. Pink is a very strong color. All right, then just make the border a little bit thinner. There we go.
I do just want to mention we have got quite a few comments coming in. So just for the viewers, we do see your comments. We're going to let Walter just finish this segment and we will get to the comments ASAP, so don't worry. But please continue, Walter, continue.
No worries. So I will absolutely get to your comments. I just want to make sure we don't miss any opportunities within the next hour. So now that we're on the 15 minutes, right? The next stop is, of course, where's my area of interest? So my area of interest is down here. So, of course, if you were trading London session, right, then your opportunity would have been to have gone long from this, from below this low. So this is a short-term low before the London, within the London session, price took out that low, and then you would have been looking to go long from the bullish order block towards this recent high, and obviously towards the H4 STH as your first profit target and the daily STH as your second profit target. So personally, I'm still long on this trade. So I've been long since Asian session from below this low, okay? With my final target being the daily STH, okay? So right now, as we're going into the New York Open, unless price actually trades back into the order block, I do not see a good opportunity to buy gold right now. Now, if you're a trader that's like a gambler or whatever, you're like, oh, I'm just going to buy now because price is going to go up. You can do that and you can still make some profit, but that's risky. So a big part of trading is minimizing as much risk by minimizing as much random behavior as possible, right? So it's a very random to just buy in a very random place, okay? And that's what leads to gambling behavior, over trading, and that will eventually lead to some sort of losses. So I'm not going to buy outside of my AOI. So the next opportunity that will be waiting for me is if price were to trade into the daily short-term high, break structure to the downside, deliver for me the first and the second instance of my trend cycle, then I'll be looking to go short. Unless that happens, I'm going to sit on my hands, I'm going to hold my long positions, and I'm going to wait for the next move. So that's it for gold dollar right now. Right now, bias is bullish, right? I'm anticipating the market to take out this previous high. So obviously the highest points that gold reached was $2,954, right? I do see price taking out this high over the coming minutes, even potentially within the next hour or two. So we're just going to see how this plays out. We'll see how this plays out over the next hour. So what I'm going to do now, I'm going to move over to euro dollar, and I'm going to do exactly the same analysis on euro dollar and pound dollar, and hopefully we might see some sort of a trade opportunity on either pound dollar or euro dollar within the New York Open. So it will be exactly the same deal. So if you just joined the session, fantastic. You're not going to really miss out on much because I'm going to go through exactly what I just went through on gold to the dollar on pound dollar.
So Walter, we have a few questions regarding gold. Before we move on to the euro dollar, let's answer, or a lot of them are a lot of the questions are based on gold. So we'll answer some of the viewers' questions.
Okay.
Kevin says, January and February were not good for my gold trades. A lot of unexpected movements and high volatility and slippages. how do you manage trading during such high news periods, or too many news at high frequency. Sorry, essentially.
Yeah. No, that's a fantastic question. So I don't think it was. So for me, like January, February was the best period for me trading gold, because it was very obvious and predictable. So when I say predictable, what I mean by that is, if you were simply like just focusing on the fact that, number one, gold has been predominantly bullish. I'm just going to go onto the 1 hour time frame, right? Gold has been predominantly bullish for quite some time. Okay. So if you were trading gold, for example, towards the end of last year. So for me, the end of last year was actually a pretty challenging period for gold, because obviously it's the end of the year, like it is in trading. End of the years are usually the most challenging periods in the market, right? So gold was a little bit all over the place. But coming into January, right, the move became like crystal clear, especially after the market took out the high of January. So it took out the high that was created on the 24th of January, right? From that point onwards, the bullish bias was crystal clear, right? Unless, for example, so the only time that I would have seen that bullishness coming to an end is if on the 4 hour, I saw some sort of a reversal that gave a sharp break of market structure to the downside on the 4 hour. And I haven't seen that. So in terms of how I basically managed trading during this period, again, I just stuck to my trading plan. It's as simple as that. I just traded the trend, right? So I didn't try to predict a reversal on gold, because one thing I noticed is some traders that I would speak to, they were like, gold is going to reverse now. It's gone too high, right? So they had this psychological bias that because gold had, for example, gone too high, I'm not sure what criteria too high fell under, but because gold was too high, they thought it was going to reverse. So they just kept looking for sell opportunity. And one of the things about trading is you have to learn to overcome something called confirmation bias. Because when you're so focused on a specific currency pair moving in a specific direction, such as in gold situation, you're waiting for a reversal, you miss out on the opportunities to actually go long, right? And that's where I felt people found gold challenging to trade, is that they were just focused on this idea that it was going to give a big reversal, and they wanted to make bank on that reversal, when actually you would have made more bank if you were also focused on the longs as well as the reversals. So I just followed my trading plan. I traded a trend, right? So whenever I saw a bullish cycle, like in this case, right, all I did was I waited for price to obviously break outside of key areas. And so, for example, this is a low, market broke structure, market broke outside of this key area. So this was my buy opportunity. So I'm going long from the order block. Market broke out of this key high. Again, this was another opportunity within this order block to go long, right? So I was focusing on these short-term trades, taking profit at key highs and key lows. And I was getting like 1 to 2s, 1 to 3s, 1 to 4s on these trades, right? And then at the end of the cycle, like in this case, I anticipate some sort of a reversal. And again, I try to trade a reversal. So for example, after price breaks outside of a range, I'm looking to go short from the order block. If I don't get triggered, I simply wait for the next move. The next move happens after price broke structure to the upside, like in this case. And I remember this trade from last week. Price gave a bullish break of structure, and I went long from the order block. So my entry was basically the wick of this candle, and I held that long, and my target was this prior high, right? So this is one of the reasons, because whenever price like gold creates a high, like it did here, and I see an opportunity to go long towards that high, I always hold my trade until price takes out the high and creates a new high, right? So that's why it's been a little bit easier for me to trade this period, because price has just been creating highs, reversing, and then trading back to that recent high, breaking above it, creating a new high, correcting itself, and it's just been doing that. So this has been the easiest time to trade gold because it's trending. But there are times when gold is very tough to trade. Like there were periods last year, for example, where gold had this tendency to accumulate for a prolonged period of time. Like for example, in this case, like here, right? Where golds are, just make this a bit smaller, there are periods where gold just gets stuck in a range. And these tend a little bit more challenging to trade. But just in short, don't get so obsessed with an idea of gold reversing or gold going long. Just focus on whatever gold is doing right now and trade in line with that. If gold is going long and it looks like it's going to create a new high, take it. If gold is reversing and it looks like it's heading towards some sort of a short-term target, take it to that short-term target. Don't take it trying to get a 1 to 11, thinking it's going to reverse all the way down to like 2.9. So that's my main advice on that.
That's awesome. And you pretty much answered Gabriella's question, which was share your gold insights, and you pretty much answered at the end. And I think there is a couple more. One person's asking, which time frame do you use? I believe 15 minutes you were using.
Yeah, so in terms of time frame, I trade from the daily 4-hour. I'm a higher time frame analysis. Again, I just focus on targets on this time frame, nothing else. And then my trend analysis is on the 15 minutes and the 30 minutes time frame. And believe it or not, my execution time frame is also the 15 minutes time frame. There was a point in my trading life where I would execute on the 5 minutes and 1 minute because I was so obsessed with trying to nail precision entry. But then I realized I was a lot more profitable just focusing on trading the 15 minutes and executing on the 15 minutes because it just makes life easier. And I can still get solid 1 to 2s, 1 to 3s a lot easier. Nice. So that's it. So I trade all the way down to the 15 minutes. So my 15 minutes is the final time frame I look at. And that's also my execution time frame as well. And
one last question. Aditi says, what impact does the inflation data CPI have on gold? And well, huge. It's the short answer.
That's a very good question. I'm going to give a very short answer to that question because there is a long answer and there's a short answer. So that's a relative. The answer to that is it depends on what the market is focusing on. When it comes to fundamental sentiments, one thing people need to realize is CPI interest rate decision, it's like with FOMC, for example, the market isn't always going to be focused on that data. So those data wouldn't always move price. So for example, I'm sure you guys have experienced a period where you were anticipating, like for example, GDP data release, and you thought, oh, that's going to push price upwards. And then it gets released and price doesn't actually do anything. So the most important part of fundamental analysis is to know what the market sentiment is and what the market is focusing on. So for example, this period of time with Trump and the trade tariffs, a lot of people in the market are now paying very close attention to two things. Number one, have the trade tariffs been effective in actually bringing the dollar back up, right? So they're looking at what is the prospect of the dollar bouncing back and being bullish over the coming months ahead. What are the kind of data that would actually affect this the dollar rallying? Number one, interest rate. So over the coming weeks ahead, FOMC is going to be a big deal. Right, so every FOMC release is potentially going to shift the market quite a lot because, of course, if interest rate keeps on rising, then that's not going to be great for the dollar. But of course, if we see interest rate dropping, then that could actually lead to the dollar bouncing back up. Another data that would also affect a rebound of the dollar is inflation data. Right, that's something that the market has been paying attention to for the past year because inflation has been a major news, not just in the States but also in Europe as well. So these are two data right now that would affect price. In terms of what exactly they would do to price, the second part of that answer is it depends on market structure. Now, there are different types of traders. There's some traders that think that fundamentals is a leading indicator for price, and some think that price is a leading indicator for fundamentals, right? I'm personally in the middle, right? So for example, if, for example, the gold, my analysis on gold is indicating that gold is currently in a bullish cycle, right? And there is a target at the daily short-term high. And I'm in the second phase of that cycle. And the market has been accumulating like crazy leading up to FOMC, right? For me, like the most obvious direction that FOMC is going to push gold is bullish. It's going to be to the upside because structurally it's in line with that. The second thing I look at is what is the sentiment? What is the expected data release for FOMC? If the general market sentiment is that interest rate is going to, for example, go up, right? Then, of course, interest rate going up is a bearish news for the dollar. Now, if the dollar has been moving in line with that sentiment prior to the data release, this is something that's known as the news has already been priced in. If the news has already been priced into the market, then you shouldn't expect anything different from the data release. The data release would most likely move price in the opposite direction. So this is known as a counter sentiment reaction to the news. So there's a lot of stuff when it comes to interpreting news with price. It's not, I'm sorry to say, but it's not like there isn't like a hard rule to it. I know sometimes what people want to hear, they want to hear that, oh yeah, if FOMC buy, if this sell, that's just not how trading works. It's very beautifully dynamic. But when you really understand the way fundamental and price action play with each other, it becomes a little more interesting to know and better anticipate the way our news would affect the market. So I hope that answers your question. That was a short answer, by the way, so you can only imagine how long the expanded version is. But but yeah, so I hope that that sort of helps.
Awesome.
And I see another question. Where would be S1 and S2? What is S1 and S2 referring to in this case?
I think it was when you were doing the analysis before, maybe support. But yeah, Lauren, if you could be a bit more specific exactly what you mean by S1, S2. When you
because I don't really use support resistance in the traditional sense. But S1 could be stop loss. I don't know. But you usually have one stop loss, not two. So I don't know. Just let me know. Which pairs am I focusing on during the session? So gold, pound, and euro dollar. Currently, I've just done gold. My bias on gold was bullish. I'm anticipating price to take out daily short-term high at some point within the next 2 hours or so. It's already heading there. We'll see how much it takes out the high by. Any other questions before I go into euro dollar?
I think that's good.
Awesome.
All right, euro dollar.
Beautiful. All right. Now, I'm excited about euro dollar, pound dollar, because I don't typically look at these because, I mean, gold is just more than enough. But there are really good opportunities that euro dollar and pound have been doing really, really well this last few weeks. So it'd be nice to see if there's an opportunity for this in New York today. So starting out the analysis, of course, with just identifying the daily short-term high and daily short-term low. So again, these are just areas that would form profit targets if I so happen to be trading in that direction. Sorry about this, guys. I know I'm doing my fresh analysis for you all. So this is the next high. I know price has recently taken up this high. This high would be a little bit more significant to me when I go down to the lower time frame. But for now, the next high that hasn't been taken out is this high right there. So I'm looking for swing points. And then in terms of the most recent low on the daily, it's obviously going to be this low down here that was created on the 19th of February. So this would form my daily short-term low. All right, going down to the 4-hour time frame. Again, I just want to get rid of the session breaks. Sorry. When it comes to chart hygiene, I'm a bit of a OCD. Get rid of that. Perfect. All right, so on the 4-hour time frame, chart hygiene is very important. It's so important. Sometimes I look at some traders' charts and they have like 25 pins on a chart. I'm just like, how are you seeing anything?
I know. It's got to be clean.
So on the 4-hour, it has to be clean. So we're looking for the next short-term high, which is this high right here. And then, of course, I'm looking for, so notice that price took out this high recently. So it took out a form of buy-side liquidity. So again, the significance of these highs is I'm looking for liquidity pools, because if we boil down the market to the very, very, like, what is it about? It's about liquidity. It's about going from buy side to sell side to buy side, right? So that's the significance of me identifying these highs and lows. It's not just for fun, I promise. And then, of course, the next low that I'm looking for is going to be this low that was created down here. So this is going to be my 4-hour short-term low. Voila. And now that that's done, I'm going to go into the 1 hour. And again, what I said earlier, I'm looking for simple, like I'm looking for confluence, right? So this is a confluence down here. So you can see where my 4-hour short-term low is. Also happens to be where relative equal lows are created. So major sell side liquidity down here. So if I so happen to be short on pound dollar within this range, then this is a very clear and obvious target that I'm going to be taking profit. right? So I'm not going to, again, I don't want to create a mess. Like 4 hour already designates that, right? But there's also, it's important to note that this also has relative equal lows. So I'm just going to put a note on that. So major sell side pull down here. And if we look to the upside, right, are there any highs that's intermediate from between the 4 hour short-term high and the 4 hour short-term low? And the answer is yes. So we can see this intermediate high right here, which also happens to be, so if you just take a look at this, one thing you should notice is that price is in an accumulatory range. So this is an accumulatory range. It's not so obvious in the 1 hour, right? But if we go down to the 5 minutes time frame, right? Super obvious. Price is just moving horizontally, right? So again, just going to go back to the 1 hour. All right, so this is a 1 hour short-term high. Simple, go down to the 30 minutes. Right, so on the 30 minutes, I'm now interested in trend, right? Where is the market trending towards? Like, is it a bullish trend or a bearish trend? And to identify this, again, I'm not going to use trend lines because that's very restrictive. Rather, what I'm going to use is a trend cycle, right? Which also is not just like a lagging indicator, because the thing about trend line, it's more of a lagging indicator as opposed to a leading indicator. But with trend cycle, it's a lagging indicator as well as a leading indicator, because it allows me to anticipate what the market will potentially do over the coming hours. So first part of my trend cycle is, of course, the area where price breaks market structure. Okay, there you go. Sorry about this. And it's all right, and then just visibility as well. Sorry, I don't want this popping up on all my charts. It's 30 minutes. And then second part is, of course, going to be, so this is the first low. So again, I'm focused, just in case you didn't notice, I'm focusing on the swing highs and swing lows. So this is the first low that was created. The market shifts below that low, breaking structure and creating this imbalance right here. You can see the market already retested that imbalance. I think if you, someone that does ICT, we call that fair value gaps, different names for it. I'm not going to get so much into the names of things, right? But it's one. And then the second point is, of course, and by the way, I don't trade any specific philosophy. Like what I trade is a combination of so many things I've picked up over the years, and I kind of just made it mine. But you see, yeah, if you've studied smart money concept, if you studied ICT, if you've studied all these kind of stuff, you will be familiar with some of the concepts I use. So there's one, there's two below, creating now that second leg. So at this point, it looks like we are in a bearish cycle on pound dollar, right? So I'm anticipating some sort of continued move to the downside, especially towards these equal lows. However, I'm not just going to sell randomly. I'm going to sell from an area of interest. So before we get into area of interest, I'm going to see where the 15-minute cycle is, okay? And that will give me an idea of what to anticipate better on the 30 minutes. So 15 minutes, again, what I'm looking for is very simple. Area price break structure, we can see swing low down here, right there. Price shifts below it, breaking structure, nice imbalance. Price retest that imbalance, and it continues to the downside. All right, so again, just going to make this 15, 15. Okay. And then after that, this is the second low that was created away from this range. So there's a new low that was created. And then market then accumulated, consolidated, right, before creating a new low down here. Okay. And then after that, of course, price then retest and gives that final aggressive move to the downside, which I always anticipate, right? I call this like the 3x. Doesn't always happen. Sometimes price would give the third move and then reverse and then give a bullish trend, right? But there are ways to anticipate it. One of the best ways to anticipate it is usually the market would move to retest the bearish order block like this, right? So retest the bearish order block and then gives that aggressive move. And usually that move is a sustained run. So this is something known as vector acceleration. So whether you get sustained candles, and these are usually larger candles compared to obviously what would have happened before. So this is a liquidity run. Obviously, the market was running towards some sort of sell side pull. So that sell side pull is below this low down here, right? And then, of course, feel this imbalance. So it's a very small imbalance. Market traded into this imbalance down here, right? And then obviously took out this short-term low down here as well, right? So obviously, major sell side run, completing that bearish cycle. Okay. Now, after this, what I'm anticipating is some sort of a reversal. So with reversals, especially when we get aggressive runs like this, I'm going to show you something that is really cool that you can look for that would help you to, especially if you trade a reversal, like these are perfect targets for reversals. But the first thing is, of course, I can see that the market has given this initial leg and then giving me a break of structure to the upside. So right now on the 15 minutes time frame, my bias is actually bullish. But now the second thing I mentioned just a second ago that I look for is something known as equilibrium. So equilibrium is the midpoint of a range. So we can see that the market has moved from A to B. So this is the high of the range. This is the low of the range. The market has taken out major sell side pulls and the market has accumulated within that range. So therefore, what I'm interested in is at what point will the market move to the midpoint? So the midpoint, the equilibrium is that 0.5% point between the extreme high and the extreme low, okay? There we go. So this is the equilibrium, right? So I know that there's a very high likelihood that on the upside, the market is most likely going to trade into the equilibrium. If you want to understand price better, think of price like an elastic band, right? When you pull an elastic band, right, obviously it creates potential energy to the point where when you release it, the elastic band will eventually contract back to its midpoint, and that midpoint is your equilibrium. So it's the same with price. When price is expanded in a large range in a short space of time, right? So this is a large range expansion in a very short space of time. So this expansion started on the 24th of February, right? So it took literally a single trading session for this expansion to happen. What would typically happen is the market will contract back to some sort of a midpoint. So it's just a general, you can go away and you can look at your charts and you can actually test this out for yourself. But it's something that I've personally observed that price tends to do over the years. So right now, what I'm interested in now is the fact that the market has delivered 2 expansions to the upside. What I'm looking for on the 15 minutes is my bullish order block. So this is my 15 minutes block of order that feeds my area of interest to go long. Sorry, I'm on the wrong. So I'm interested to go long from within my buy zone, and I'm looking to sell or take profit at my equilibrium, which is this line right there. So I'm just going to label this equil. So this is my midpoint, okay? I'm going to make this red, right? Now, the reason this midpoint is important because if we go to the 30 minutes, right? At the start of the session, I said the best opportunities tends to come from when the market is out of sync. So when it's in sync, you still get great opportunities, but I personally love the out of sync opportunities because now the 30 minutes is indicating bearishness, but the 15 minutes is indicating bullishness, right? That's out of sync. Like if we looked at dollar for like gold to the dollar, for example, right? There were the 15 minutes and the 30 minutes are very clearly in sync, right? Both time frames were indicating bullishness. So in this case, there was no ambiguities. I'm looking to go long, and I'm anticipating price to get to the daily short-term high. Whereas with euro dollar, right, we're looking at an out of sync market where one is indicating bearish, the other is indicating bullish. So the question is, how do you trade around this, right? So these usually creates 2 different opportunities. So the first opportunity is my 15 minutes long opportunity. And the second opportunity that will come later on is going to be my 15 minutes short opportunity. And on the 15 minutes time frame, I'm only interested in selling, right, from a bearish order block. So in this case, if we look at this, this is the initial range that price created before that aggressive shift outside of the range, right? So this is my 30 minutes bearish order block or my 30 minutes area of interest. And this is my 15 minutes area of interest down here. Okay. So how is this going to work? Very simple. Now, there are two ways that I like to trade this. Now, the first way is if I see something like this, right, I'm like, okay, within the range, where is a key area within this range that I could be looking to buy from? And usually that's going to be a short-term low or it's going to be an imbalance, right? So in this case, I can see very clearly that there's an imbalance right here. Okay, so this imbalance forms my entry zone, right, on the 15 minutes time frame. Remember, I only execute on the 15 minutes time frame. So for me trading this, I'll simply just go long from the imbalance. My stop loss is going to go below my order block, right? So from this low to this high, this forms my order block. My stop loss just goes a few pips below that low. And then my target is going to be the equilibrium, or even it could be, so again, I try to aim for a minimum of 1 to 2 for my profit target. I don't really enjoy one-to-ones because in the long run, if you take a lot of trades one-to-one, you're not really going to be profitable. But is it possible to get 1 to 2 within a range that is an area of interest? And the answer is yes, because this is my 30 minutes AOI. Within this 30 minutes AOI, there is a short-term high right here. So I anticipate if price were to break above this equilibrium, it could potentially even trade towards the short-term high, right? This would net me a 1 to 2 on that long trade. Okay, so this is the first part of this position. Now I could just go ahead and actually execute on this now. So I just create a limit order and I'll execute 1% risk. So I'm typically anywhere from 0.5. Actually, I'll go 0.5% risk just in case pound dollar also has an opportunity. All right, and then take profit, set stop loss, set below the low, and I just execute that long. Okay, so that's the setup for pound dollar. Now the second setup will happen. So if, for example, this setup does play out the way that I'm anticipating, because there's no guarantee anything happens in the market, right? But if it does play out the way I'm anticipating, and it goes towards that 30 minutes AOI, and I do see that the market obviously trades into my 30 minutes AOI, I'm not just going to immediately sell, right? What I'm going to be looking for is, so I'm going to just quickly just paint this out for you guys so you can sort of get an idea of what goes on in my head. So price, for example, so right now we're in that second phase of the cycle. I'm anticipating the market to give me that third leg into that 30 minutes AOI. Now, what would happen is usually after that third leg on the 15 minutes, especially if I'm anticipating a reset in line with the 30 minutes bearish cycle, I would wait for the 15 minutes first to break structure. I will have my AOI on the 15 minutes, and then I'll look to sell on my 15 minutes AOI within that 30 minutes area of interest. And then I'll just be looking to obviously take that move to the downside. It would be just an immediate sell, right? I would first wait for a 15 minutes confirmation, which is a 15 minutes bearish break to the downside, and then I'll be looking to trade based off that, okay? Any questions on pound dollar before I move on to euro dollar?
I haven't seen any questions come through. I think people are very pleased with the explanation. That was crystal clear. But again, guys, as well, I mean, this will be recorded as well, so you can always re-watch it. So if you feel like, it might be a bit quick and you're not keeping up, that's absolutely fine. It is a lot of information to take in. But again, you can watch it again on YouTube after the live session.
It is a lot of information.
So don't worry too much if you're not able to get all the notes down in time. Oh, we have a question. Kevin says, isn't it a head and shoulder?
Yeah, someone said, you could say it's a head and shoulder. I mean, I personally don't trade your textbook retail concepts just because I find them very restrictive in the same way that I explained about trend lines being restrictive. And head and shoulders, so when someone talks about head and shoulder, what I'm seeing is order flow, right, around that pattern. Because remember, the pattern is not what drives the move. It's the market, it's a dynamic underneath the pattern that drives the move. And it's important to understand the dynamic underneath the pattern, right? So you're seeing head and shoulder. I'm seeing what's happening when that head and shoulder is taking place. So you're right. Yes, it could be a head and shoulder pattern. But that's not what's causing, or that's not what the dynamic that's pushing price to move in that specific way. So yeah, it could be head and shoulder, but that's not what I'm looking for when I analyze the markets. Okay. So I'm going to move on to pound dollar. No, euro dollar, right? I believe, right? I think I just looked at pound dollar, right? I did. You see, the thing, right, is I could just market order execute this because this is already traded into my AOI, right? But I'm a very stubbornly disciplined trader where if I can't get my entry, I just rather let it go. But of course, like I said, there are two ways one could trade this, right? So the first is taking the entry from whatever from whatever liquidity zone is within the order block. The second way that I'll also trade it is if price trades outside of the order block. So for example, I could sit and just wait for the 15 minutes to close outside of the order block. And then I usually would just place a quick pending order at the tip of the order block. Because then usually what happens is when the market closes outside of the order block, it will then retest it and then rally, right? So that's the second way that I could execute on this. So wait for the close, place a pending order at the order block, and then anticipate a retest. And then after that, take the continuation of that. But again, I want to get to euro dollar. I don't want you guys to miss out on this. Of course, you guys are watching this live. So if you are trading this as well, fantastic. All right, euro dollar. So again, same process of analysis, right? So if we take a look again, I'm looking for areas of buy side liquidity, right? Again, just very simple. I was gold faring, by the way. Just take a quick glance at that. Oh, look at that. Beautiful. All right, so gold is now taking out that major high. So we're witnessing history, you guys. We are the first people to witness gold hitting 2.9 thousand, well, $2,955. I do think gold is going to get to $3,000 potentially this year, and that will be very, very significant. I'm not going to talk about why that will be significant because I think I'm already over time. Sam, let me know if I'm over time. Too much.
No, you're good for time. Save that for another live stream.
Yeah, so now is not the time for that. So I'm passionate about this stuff, so I can go on for ages. So with daily, right, we're now looking for the same. So it's the same idea, right? Key high. So this is the next major area of buy side pull. So again, it's a swing high at price. So if we're looking at this, right, look at where price is. Look to the left. This is a swing high, but price is traded above it, right? So I'm not interested in this anymore. We look further to the left. Well, this is another high that price hasn't taken out, right? So this is my most recent daily short-term high, okay?
Walter, Kevin has asked a question. I believe it's specific right now to what you're doing. So before we move on, maybe you could just have a look at his question, if you can see it on your screen.
Oh yeah, of course, 2 seconds. Yeah. For example, do you always wait for a retest? I just feel that waiting for a retest may make me miss the chance to take the trade. For example, in the latest price move, would you wait for it to test the last high before entering a long? Are you referring to euro dollar? If you're referring to euro dollar, do I always wait for a retest? Absolutely, right? Now, yes, you're scared you might miss the move, and that's fine. FOMO is one of those things that, as a trader, you're always going to deal with. But you want to be the trader that doesn't let FOMO control your behavior. You want to be the trader that you recognize FOMO's there, but you just slap it and leave it on the side, okay? So do I always wait for a retest? Yes. If I miss an entry in my area of interest, I'm not going to chase price. Never chase price. Because what happens if you chase price, not always, but I guarantee you 8 out of 10 of the times, you're going to get destroyed, right? So because the numbers always works out in my favor over time. So I have no need to chase price. If I miss a trade today, it's not the end of the world. There are probably 5 or 6 trading opportunities that happens every single week. So all I do is I simply wait for the next one, right? And you need to get to a point in your trading where you need to have very clear rules, very clear guidelines on where you should enter, where you should take profit, where you should position your stop loss. And then you need to trade in a conditional way. Either this happens or that happens. If this happens, I do this. If this happens, I do that. But if that doesn't happen, I do nothing. So if price trades into my area of interest, which is retesting the order block, then I'm interested in entering and going long. If price doesn't trade into my area of interest, then I'm not interested in entering a trade. Simple as that, right? So I don't really think in terms of, oh, I might miss the trade. Yes, I might miss the trade, and I do recognize that. But I've experienced so many times chasing price and getting destroyed that I'm no longer interested in that anymore. It's kind of like if you go on a bunch of bad dates with the same kind of woman, you kind of want to stop dating the same kind of woman, right? You want to start maybe trying to date something like a different type of lady. So you need to learn from experience. But my advice is, a smart person, right, learns from his experience, but a wise person learns from other people's experience. So you should be wise. If you haven't experienced getting wrecked by chasing price, I'm warning you, don't do it. So if you're wise, you listen and learn from that. Okay. Don't try to experience it yourself. Believe me, it's not always fun. Well, I hope that answers your question, Kevin. So let's go back to euro dollar. So with euro dollar, I've identified the daily short-term high. Okay. Next, daily short-term low. Okay. And just a keynote on why also you shouldn't change price. Sorry, I try to let this go, but I just hope this. I just want to show you an example of why it's wise to always wait for retest. So let's imagine now, because it affects your psychology. So how you manage your trade and how you enter your trade are actually very aligned, right? So for example, in this case, my entry is down here. Now, because my entry is down here, the price is already like within a few minutes of me entering, it shifted away from my entry point, right? I can do two things now. I can move my stop loss to break even and remove risk from the table and not worry. Or I can leave my stop loss exactly where it is below the low and still not worry because price is already like, quite a bit away from my entry point, okay? Now, however, if I were to enter, let's say that price, for example, had shifted and I entered at exactly this point. So I FOMO'd in and I bought right here. But immediately after I entered, price pulled down against me. So now I'm in a drawdown. Now, psychologically, this is very different from me entering a trade and mostly being in the green on that trade and entering a trade and immediately seeing a red on that trade. The way that I manage these two trades are going to be very different. In this case, I'm more than happy to sit on my hands and do nothing. In this case, because I've chased price, now I'm thinking, oh, shoot, is it too late? Have I missed a trade? And now I'm doubting myself. I'm doubting my analysis. And what would that make me do? I'm going to close the trade too early because I'm like, maybe I've missed it. But now what happens is I close the trade too early, right? Price comes down, I close the trade, and all of a sudden I see price bounce back up again on this bullish candle. And I'm like, oh no, I was right. Now at the end of this bullish candle, I buy again. But what happens on the next candle? Price comes back down. So immediately, as soon as I buy, I'm now in a red again. Now I'm thinking, oh no, I'm gonna lose another trade. So what do? I FOMO out of that trade again and I get out. But immediately price bounces back up, right? And I'm like, damn it. At this point, psychologically, I've exhausted myself for no reason. So this is why where you enter will significantly affect the way you psychologically manage your trade. And that's why entering at key areas is so important. This is what changed my price and taking inefficient entries. That's how over trading kicks in. That's how you're going to end up taking losses that you could have easily avoided, right? So that was just a little side note. I do apologize. How is a pound dollar doing? All right, so this is still doing its thing. All right, so let's go back to euro dollar. Sorry, this has been patiently waiting for us to look at it. By the way, if you have any questions, just feel free to drop it. I'm more than happy to answer your question, but we're nearly done here. All right, so on the 4-hour time frame, again, looking for the same thing, short-term high, short-term low, okay? And then this is my short-term low down here. I'm just going to get rid of the, it's just kind of a session breaks. There we go. All right, so on the 1-hour time frame, I'm looking for really, really strong confluence, or like equal highs, equal lows. I don't really see any. So I mean, I see this low and this low down here, but I wouldn't say they're relatively equal. But if I look a little bit further down, again, I don't really see anything major. But what I do see on the 1-hour time frame is I do see an intermediate high right there. So this is very important. Okay, and then there's of course an intermediate low down here as well. All right, so there's a short-term low. All right, perfect. Now, if we go down to the 30 minutes time frame, again, I'm looking to establish what the trend direction is. So I'm just going to start down here and then make my way back down, okay? So it's a little bit different from pound dollar. So I see the first instance of my bullish cycle is right here. So this is number one. All right. So sorry, just visibility. Sorry, guys, I'm a little bit OCD. It's 30 and the 30. And then we have our second instance. So we can see the market creates an intermediate high, gives a great shift, breaking market structure. And then we can see that what was created was an imbalance right here. You can see the market sort of like traded right into it. So I'm curious to see on the 15 minutes if what we could be looking at is a potential bullish cycle similar to euro dollar. And then obviously we're seeing that third phase up here. And then after the third phase, obviously what we saw, so the market took out major high and then gave that bearish reversal to the downside. So we have the first instance right here. The market created a new low. So it has to be a new low, right? Down here. And then after that, the market created another low down here, which is that third instance. Okay. So what we're looking at is a bullish cycle to the upside, bearish cycle to the downside. Now, has the market retested that second range? It hasn't. So there is a likelihood. I mean, I don't see a bullish break to the upside, but there is a possibility that we could be looking at a potential bullish reversal on the 30 minutes. So if we then go down to the 15 minutes, and what we're looking for is exactly the same analysis, but I'm going to ignore this bullish cycle, and I'm going to start with the bearish cycle to see where we are. So I'm going to make this green. There we go. I think I've been filled on pound dollar. All right, so this is the first instance right there. Second instance is right there. This is after the break of structure, the new low that was created. And then we have that third low right there. You can see the market then goes to retest the second range. So we see break, retest. So there's a good opportunity that would have, if you were trading at this time, before obviously the market then shifted to the downside. Now, what I usually see takes place is when the market does this, it usually would reset. So this is a new trend. So there's a new break of structure. That's number one. This is number two. Again, there are very specific rules when it comes to identifying the trend cycle. So I don't think we'll have time to go through every single one of them right now, but just be aware that this isn't random in any way, shape, or form. And then market gives free. This is number two. We can see the market has retested the second range. So actually, this is interesting. So I see euro dollar being short towards this recent low. So euro dollar is most likely going to take out the H1 short-term low, right? So on the 15 minutes, I do not yet have a bullish indicator, okay? So right now, this looks bearish to me. Okay, so right now, this is still within a bearish cycle, right? We've seen that third move to the downside, but the market has retested the secondary range and it's now on its way back down. And if we look on the 30 minutes time frame, right, there is no bullish breakout structure to the upside. So this is still very firmly within a bearish cycle. So this is how, again, I establish these things, right? So is bottom price bullish or bearish? It's bearish. I'm interested in selling. Cool. Where am I interested in selling from? Well, in this case, I would have only been interested in selling from this bearish order block, right? So this would have been my sell zone. I think we missed it because the opportunity took place right. So I'm just going to draw a line. All right. So the opportunity would have taken place after price essentially took out this high. So we see this short-term high right there, right? So that would have been where I would have gone short from. So this would have been a trade. So short from the short-term high, stop loss goes above the order block, right? And then I could either I'm looking for a 1 to 2, right? So if I cannot get a 1 to 2, so again, I could get a 1 to 2 to the H4 short-term low, right? But this is very risky. There's a likelihood that price could simply take out the H1 short-term low and then bounce back up. The reason being is because, again, price has created this expansion to the downside. And because of this expansion that was created in a short space of time, right, I'm anticipating at some point for the market to trade back to equilibrium, right? So the equilibrium is the midpoint. Which is right there. Okay. Now I have a general rule. I don't like trading away from the equilibrium at the end of cycles, right? I would only trade away from the equilibrium if it's like in the middle of the cycle, then yeah, that's fine, right? I'll trade a continuation to the downside. But this is the end of cycle. So that bullish move can happen very sudden and very fast. So market could simply take out this low and then rally to the upside. So for me, a trade like this is not worth taking. It's too risky, right? So I'm just going to wait. So something like this, I sit on my hands and I wait. And I wait for the next best move, which is after price takes out this low. And if it gives me a 15 minutes break of structure to the upside, then I would gladly take that long, right? But for now, although yes, I do see price going down to going short, especially to take out this low, there is a bit of an uncertainty if it will go and also take out the H4 short-term low as well. It's possible, but it's risky, okay? So this is how I evaluate trades as well. It's not just, hey, I've met all my setup targets. You also need to evaluate the general context around the trade. Is it something worth taking or not? And in this case, I don't think it's worth taking. Any questions on this?
We'll give it another 30 seconds to a minute. Hopefully, it's allowed people to write the questions, etc.
Yeah. See how this performs.
To the viewers watching, if you have any questions about anything covered, feel free to pop it.
It's okay. Is there anything, I mean, any questions whatsoever?
I think they're good. We'll give it another few minutes, but no, sorry, I thought something came through, but it didn't. Okay, well, we'll move forward. I don't think if there is questions coming in, we'll catch them as they come in live then, rather than sit and wait. But yeah, that was some very, very interesting analysis, on 3 very heavily traded pairs. There were some good questions that came in, and Walter answered them absolutely professionally and, perfection. Yeah, like we said, you can always watch these live streams. Once they're finished, they're going to be recorded and uploaded, so you can always go back. But notice a few things, right? Exactly. Even if it takes you a while to, understand the strategy or the thought process behind it, because of course, it's going to take you a while to get it. You can't get it just from watching one live stream, so you are going to have to see that repetition. But notice the discipline that Walter has displayed today. He is making his analysis, and he's not just jumping in, even though he has a strong bias, right? He's not going to jump in. He's going to wait for the right time. Even if the trade would most likely work out well, he's still going to wait for the right time for it to get to the right areas, for it to retest, etc., in order to be in line with his rules and his trading strategies. And he's looking, before he gets in, at the risk reward. He's already calculating, is it even worth getting in this trade, right? Is the 1 to 2 perfect here? Is it possible? So look at the discipline that he's displaying in these sessions. And that's something, very, very important, because it's never so much about just one strategy in particular. It's usually 90% discipline, then 10% strategy. Of course, the education is important, but really focus on the discipline, because if you're not disciplined, you're not following any strategy ultimately. But yeah, those are my 2 cents of one thing I really noticed, which I found truly, truly good. The way you were very disciplined in analyzing the market. That was awesome. That was really good to see.
Thank you very much. Thank you. Yeah, it came with time, and it would be nice to obviously over time explain things in a way that is more refined. I know there was a lot of information that was dumped on you today, but yeah, like that I mean, my analysis is simple, but of course it's simple to me because I've been doing it for a long time. But I can also understand that if you're looking at it for the first time, it might look like a lot is going on. So hopefully over time, things will be a bit more clearer, concepts will be more better understood. And again, we're not all going to have the same styles of trading. Of course, if you trade a very specific style that works for you, then stick to that, right? There isn't a one perfect way to trade, never, right? There's so many different systems in the market, so many different ways that can yield profitability. Like Sam said, the biggest part of the equation is that 90%, which is your psychology, which is your discipline, which is yourself. 2 people can trade exactly the same strategy. One can be profitable and one can be losing. And it's not because the strategy is ineffective. It's usually because one has more discipline than the other person. So yeah, and every single one of you guys today, you could be beginners, you could be a little bit more advanced. You could be looking to level up wherever you are. And it is my true desire that by you plugging into these sessions, you are able to level up your trading in a way that will help you to all be profitable.
Absolutely. Very well said. Very well said. I mean, I found it really, really fascinating. Obviously, I've been trading for many years, but, especially for a beginner, I can see how, you're going to have to rewatch it, come join these live sessions more. You're not going to get it the first time. That's natural. But don't be afraid. I mean, we had one viewer, Kevin. He has been asking some excellent questions, really getting stuck in, and that's one way to learn. If you do have a question, if there's something you're unsure about in anything you saw, go ahead, shoot a comment. Walter will definitely be more than happy to answer it and give a very good explanation. So it's all about learning. It's all about repetition, essentially. You can watch it once, it might click a little bit. Watch it a second time, you catch a little bit more. It's layered. Watch it 10 times, and you'll have a much better understanding. So, and in different scenarios. So come attend a lot of these. We're going to be doing lots more of these live sessions. Okay, and we're going to be covering from many different trading coaches as well. Okay, so if you like the way Walter trades, and that feels very unique to your kind of personality, tune in when Walter's doing them. If you like the kind of way I trade, the fast scalping ways, tune in when I come in. Tune into all the sessions, and if you're unsure, tune into all of them and see which one you prefer. It's trading is a lot about discovering yourself, I find. And there's like Walter said, there's 101 strategies out there. There's not a single one that's a magic bullet or the holy grail, so to speak. That unfortunately doesn't exist. But if you focus on your discipline, that's what all traders have in common. They can be trading any instrument, different strategies, different styles, but all profitable traders have the psychology in common. They never break their rules. They have clear set rules and they never break them. And that does come with time. And I know it's something probably you've heard a million times, but you need to keep hearing it if you're still not doing it. Do you see what I mean? Got to always be repeated. But this has been a fantastic session, Walter. Really, truly appreciate it. I love how clean your charts are.
It's been great.
How clear you explained it. I even like the color of your charts, rather than the red and green, the blue and black. I love it. I might be stealing that template.
Go for it. I stay away from the red and green for psychological reasons as well, because we look at red as a negative thing, right? It's a negative color. Like if we look at nature, if you look at an animal that has red on it, like a snake or something, you think, oh, it's poisonous. So it's the same as the market. When you trade with red and green, traders tend to have this idea that red, like selling is negative, buying is positive. So it gives them that confirmation bias towards buying, unconsciously as well. People are not really aware of it, but some traders, if you actually look at the amount of longs you take to shorts, some traders are more on the long side than the short side. So they take more longs than shorts. So it removes that sort of bias, because I don't want to see selling as a negative thing. I don't want to see buying as a positive thing. I want to be neutral about both, because then that way I'm open to the information the market is giving me about whether going long or going short is more ideal and optimal within that specific situation. So that's why I believe the colors you paint your candles is very important. You don't want to activate any subconscious bias associated with that color.
That is actually very, very interesting. And I think that's something a lot of beginners should be, if you're struggling, if you're getting nervous in trades, give it a try. Change the colors of your charts. I've never thought about it, but you're absolutely right. It makes perfect sense. If you are struggling to keep control of your emotions, change the color of your charts. It might actually help you, deep down, be a bit more relaxed and not see it as such like you said, not have a particular bias to one direction, where you're, buying at the wrong times just because psychologically, like you said, red is seen as, dangerous or, as a color. That's really fascinating. That's awesome. That's amazing. And I love the way you really went through it all in detail. I love how clean your charts are. I really do. There's something about a nice clean chart presented that's just that makes me smile. I don't know why.
I think it makes anyone smile. And there are times when I'll look at the chart and there's like 20 things on it. My brain just goes funny, man. I'm just like, I don't know what I'm looking at. Or someone will send me their analysis, but like, hey, look at this. And I'm like, what are you doing here? Are you trying to paint a picture? I don't know. The cleaner, the better. It's like your room. You know, your bedroom it's easier in your home to think and be productive if your home is organized and neat. It's hard to be relaxed in that setting. Yeah. So your chart is like your home. It's where you spend your time mostly, right? As a trader.
Yeah. So no, you're absolutely right.
80% of my days in front of my charts.
Yeah. No, you're absolutely right with that. Your chart is your home. You know, if you're spending a lot of time, you want it to look clean. And also, you know, if you have too much clutter on it, you start finding conflicting information, and it's going to confuse you more. And I think the reason a lot of people like to add stuff to their charts is because they're trying to predict the market 100% of the time. No. Just wait for the right times for your strategy.
Exactly.
Wait for the right setup, and you won't need 1,000,001 indicators to tell you what's going to happen every single microsecond. Just be patient. Again, following rules, discipline. It always comes back to the fundamentals of just being disciplined. So yeah, really, really good stuff, Walter. I don't think anyone's going to come in with any new comments. We'll give it another 20, 30 seconds. Otherwise, I think, unless there's anything else you want to show or say, feel free. But otherwise, I would say this live session is concluded.
Yeah, I mean, I'm worried that I don't want anyone to get like brain fuzz from too much information, because then you can't actually do anything with it. But yeah, I mean, just go through whatever you know you've given today, and if you want to have a go at breaking down the markets, you know, in a similar way and see if you're right. Just I'm also in the Discord channel for Holler, so just put it in the Discord channel, and I'm more than happy to take a look at it and give some feedback. So yeah, you know, the main thing is just try and keep it as simple as possible. But of course, I'll be a hypocrite if I say that now, because I can only say that now with experience. But at the beginning, what I did, I read so many books, I watched so many videos, I try to learn all over the place. So I definitely didn't try to keep it simple at the beginning of my trading journey. So it's okay if you're a bit of a chaotic state right now, that's fine. But the goal is to simplify, right? that should be the goal.
Yeah, absolutely. And also, you mentioned you're in the Discord. Absolutely, I forgot to mention it. If you haven't joined the Discord, go ahead, join it. Ask questions. You know, reach out. We can't help you if we don't know your problem, essentially. So feel free, reach out to us. We're always more than welcome to, you know, lend a hand, give you guidance in any way, shape, or form. So yeah, thank you again, Walter. I think there's no more comments coming in, so you can relax, sit back, enjoy the rest of your evening. What time is it there in Indonesia at the moment?
Well, right now it's 10:33 p.m.
Oh, okay. Well, take the night off. You deserve it. That's been an absolute fantastic session. Walter, we will definitely see you again soon. And viewers, hit that like button, subscribe. I don't know where you're watching from, because we're on all platforms right now. Whichever button there is to click, that's good. Click that button, join the Discord, and we will be back again very soon with more live sessions, and you will be the first to find out from the Discord. So please go ahead, join the Discord. It is a game changer. So
and make sure you don't join the next live unless you're bringing on 2 new traders with you. So if you're going to join the next live, either with Sam, with myself, with anyone else in Holler, make sure you send a link to 2 traders that you know that are looking to also level up, and get them to also plug into that live as well. Don't keep all the good stuff to yourself. Share it, okay? Because believe it or not, sharing is caring. Exactly.
Absolutely. Awesome stuff. All right. I think we're good. Guys, we'll end it there. Thank you all for watching. Walter, I'll keep in touch. I'll chat to you soon. Have a good evening. Awesome. Take care, everyone.
Thanks, guys.
Bye.
Have a good evening, everyone. All the best. Take care.